Uh, so we're basically going to start by looking at the dollar and what happened last week. Last week was quite an interesting week when it comes to trading. There has been a great deal of volatility at or around the US dollar, especially with what's happening in Europe. What's happening in Europe is something that not happened before in history. Nobody has experienced or have any information of what would be the repercussion of what happens in Europe, what happens in Greece. Is Berlusconi going to retire? Is he going to step down or not? And the market all of last week was getting basically knee-jerk reactions for every piece of news that comes out. And we're getting those moves in one direction, and then suddenly the market turns around and we get the a classic example for that would be the US dollar. And as you can see, that move that we had on the 9th, and that move is a solid move because it is not just a big range day or a big push to the upside by itself out of a vacuum, but we had initially this move up which took place on the 1st of November, and it tested the significant point of 77.83 only to pull back and settle above the 76.45 to hold, and then push again to retest and break through the 77.83. At this stage of the game, when it broke the 77.83, the expectation was for the US dollar to actually fly up, because this would be a second structural failure to the upside, and we should be looking for the trend of the US dollar to continue higher. But what happened is, again, as we had the dollar pause, turn around, and then break below the 77.83 and to close the week at 77.13. This is still considered a neutral close. And it is not yet the trend is still to the upside. We should be looking in essence for a continuation for the dollar to resume its move up towards the 77.83. The reason I'm saying that is that, as you can see, this last 2 days are still within the range, are contained within the range of that big range day, which is the 9th. We did not take the low. The low of that day is the 76.74. And again, as you can see, it is remaining between the 77.83 and the 76.74, and therefore we are kind of neutral on the US dollar, or neutral to bearish, if you will. And usually when the market gives us a clear signal like this that the easy trade now is to go short, usually that would be the heads up that the market maybe wants to go into the opposite direction. So we will consider that setup as neutral. The other pair that we're going to look at now is the euro dollar. And as you can see, we are still trading below the 138.11, which is the 138.36 based upon the spot cash, and we are now closed the week at 137.48. We are still, as I said, below that, so the trend is still to the downside, and even though we had a positive day or a positive close, we are still looking for a continuation to the downside. As you can see here on the weekly chart, it is still a negative week. Yes, we had a snapback from the low, coming back trading below to one last week, 2 weeks lows, and closing the week at 137.48. Even though it is a positive close on the weekly, it is still look at is still negative, and we should be looking for the resumption of the downtrend. We will change our bias on the euro only if it trades above the 138.11 based on the future, or the 138.36 based upon the cash. If we look at the British pound, again we had just this push or this reversal day on Friday, which is only a reaction to the decline that we had in the US dollar. So this is not particularly pound strength, it is more dollar weakness than anything, and we will only go and buy the pound if it trades above the 160.97 based on the future, or the 160 let's see what the number is on the spot. Only if it gets above the 160 based upon the 160.97 based upon the future, or it's not the 162.90. Fine. 161.10. So our buying point for the US dollar for the British pound will be the 161.10. That will be the price where we can say, okay, now it's the time that the pound has changed its direction. Now it is moving up. On a trade above the 161.10, that would be our indication that the US dollar or the British pound now is moving upwards. Until this moment in time, it is still in a narrow range, and the bias is still to the downside. The problem is we had a sell-off in the dollar, but we don't have any corresponding buy signals in the other pairs. If you look at the yen, there is your big capitulation that we had the other day, and now we're coming back just to test the 129.85. We closed the week at 129.64, which was pretty, we're just 20 pips away, but still, until those 20 pips away are taken, as you can see on the weekly chart, this is still a negative signal, and we should be still negative on the yen, because we're looking now for a further continuation to the downside. So this again is neutral. It is an inside week, as it is inside. So all the pairs that we have seen right now are all having a kind of a knee-jerk reaction to the sell-off that came into the US dollar. If you look at the Australian, that is the only one that may have given us the first buy signal. The Australian on a trade above the 101.64, and now it's closing at 102.44. That is the only currency right now that's giving us a buy signal. And so that is the first one we're going to be looking positively at. can see here, that it came back and it closed Friday at the 102.44. So that would be the one that we have some positive bias on, and we can be looking at staying long the Australian dollar as long as it is above the 101.64. Last but no, we still have the Canadian, and we're going to look at the yen. The Canadian again is in la la land. As you can see here, it is doing nothing. It is sitting in the sidelines. It is still below the 99.60, and we should be looking for it again to continue lower, or the dollar to strengthen against it. So we're looking for this to come down. So the Canadian is still on a sell, and the last but not least, the Swiss franc. And as you can see, the Swiss franc, again, you look, that is your momentum high. This is the pull down, and there is your first structural failure. So as of here, we are in a bear market or in a downtrend. It came, we set up the momentum low. That is your gift, and we should be looking for a second push down to take out or test this low. So one second, guys. Somebody has just, they're not able to get into the room today. So, as I said, this is again we are basically, that's a bear market. We should be looking for a continuation. And if you see here the close, we closed the week on the Swiss franc index at 101.10, and if you look at the prior day's high is 101.9. So it is right sitting on giving us a sell signal. If the dollar was genuinely weak and we should be looking for capitulation, this should have been up maybe to 112 or something like that. But for it to close at 110, 101.10, and the prior daily high is 101.9, that means it is right there sitting on a close, and you have your sell signal about 1 pip away. So with that, if you also want to look at some of the other complementary things, you can see that, for example, that the S&P, the stock market, is actually closing higher for the week. It is actually a good close for the S&P, and that is also a good sign for the US dollar, because if you want to buy US equity, you have to be using US dollar. If you're looking at the other components, which is basically the commodities, so that you can get a feel for it, you can see that gold is kind of positive. It is maintaining within the loss range, so that again it is slightly negative or neutral for the dollar. Silver had also a decent or a slightly positive close. All the grains are kind of negative. Which is an indication that the dollar should, or is basically is going to kind of strengthen. This is the scary one. This is the crude oil, and as you know, the crude oil is very sensitive with regards to the US dollar, and this has been grinding its way upwards. This is, even though it has been slow, but it has been very profound. And you look, 1, 2, 3, 4, 5, 6, 7 days. You got 7 out of 8 days. You got 7 up days out of the last 8. Every single day is putting a higher high and closing at taking the previous daily high. So this is a pretty strong move in crude oil, which is considered as negative for the direction of the US dollar. So if that says anything to us, it says to us that the US dollar should be coming down. This is the one that's most sensitive to its correlation with the US dollar. And then you can see the same picture with the gold. Also, gold had a bounce up from the 1750 all the way up to close at 1788, which is about a $30 move. Again, this is a negative connotation for the dollar. And we need to be rather careful, because this whole week we don't have any real closing that gives us a real sense of direction. We have the crude and the oil going up. We have the crude and gold going up. We have all the grains coming down. The dollar is down, and the Swiss franc is down. We would have expected that the Swiss franc to be flying to the upward, but the Swiss franc is down. So what we're having this last week is much more a reaction, more than anything, to what is happening in Greece and in the Eurozone and Italy as a whole. And we will be getting those reactions, if you will, but still your general bias to the dollar is to the upside. Your general bias to the Swiss and the yen is to the downside. The euro to the downside. The pound is neutral, and the Aussie, as long as it's above the 101.60, then we are still saying on the upside. Okay, that is basically this. So let me put the setup. So we will be looking, if I'm going to do this, I'm going to say that the dollar is neutral. The yen is weak. The Swiss is weak. The euro as long as it's below 138.36, we're staying short, and the British pound also. And you can see basically all the currencies are down. The only one that is looking strong and it's not that strong, is the Australian dollar. So if we wanted to do something, we might be focusing this week on the Australian. We can be taking the Aussie yen. That would be a first candidate. We can be taking the Aussie Swiss, long Aussie, short Swiss. We can be taking these pairs, long the Aussie, short the euro, and we can be taking all the euro, the Aussie pairs with primarily all the pairs. And the dollar, we can be looking at the dollar, the euro, the Swiss, and the pound above certain price points. They need to go above or below certain price points, and these will be primarily our triggers to get into the trade. Okay, that is the general picture. Let me save that, and you can